My name is Huynh, and today I will show for you a case study, mobile payment, fintech versus bank giant. Please feel free to ask me if you have any question through the information that I will introduce for you at the end of my video. My presentation will be divided into three parts: case study, summary, answer for case study question, and conclusion. Come to the first part. The mobile payment industry is growing rapidly where the consumer use smartphone to buy at the store, online, or send money to each other. Fintech startup, tech giant, and retailer like Starbucks app, Walmart Pay, and bank all want to become the consumer interface in payment. The competition here is not only about the technology but also about the trust, scale, and user adoption. It is linked to a chatted way because many body launch solutions and leaving consumer with many choice. A little bit information about fintech. It is originally referred to the startup that aim to improve the traditional financial service like payment, loan, and investment through digital innovation. Today, the term covers both startup and traditional banks that have adopted mobile technology. Fintech companies hope to replace cash and credit card with mobile apps that make the payment faster, cheaper, and more convenient while enabling peer-to-peer transfer. Let's come to the next part is answer for case study questions. The first one is what are three types of the mobile payment and how do they differ? The first type is universal proximity payment system. It's such as Apple Pay, Google Pay, and Samsung Pay. It's like a point-of-scale payment using near-field communication and similar technology to allow the consumer to make payment at the multiple participating card accepting location. The strength of them is that not only the payment fast, but it's also secure through Face ID, Touch ID, and is widely accepted in store with NFC. But it also have the weaknesses is that not all stores support NFC and users must register their card in advance. Moreover, a brand proximity payment system like Walmart Pay also use proximity technology but can be used only at a single merchant store. The strength is accumulate point, promotion, and personalized experience, which leading to increased consumer loyalty. The weaknesses is that the limit scope of use, only within that store system. And final type is P2P payment, a digital payment method that allows users to transfer funds directly from one person to another using an app like Venmo, Zelle, and Square Cash. The strength is that the social feature, instant transfer, is really perfect for selecting bill, paying friend, family, or small transaction quickly. And the quickness is reversible transaction. If you send the money to a wrong email or phone number, you will rely on the receiver honestly to return it. Moreover, is scam. And the next question is which age groups are most likely to adopt mobile payment apps and why? The age group that most likely to adopt the mobile payment apps are millennials and Generation Z. The reason is that they grew up with the internet and smartphone like for work, for study, for shopping, entertainment, so they will easily feel comfortable and proficient in making financial transactions in mobile device. Furthermore, young users adapt quickly, especially from COVID-19 pandemic, where the encourage contactless, cashless payment to reduce physical contact, contributing to promoting the adoption of mobile systems. They value instant solutions like convenience, speed. They dislike writing checks or carrying cash is also one of the reasons leading to the user mobile payment. For example, over 70% of millionaire smartphone users use mobile P2P payment in 2022 compared to just 38% of baby boomer mobile phone users. These figures clearly show millionaires and Gen Z are leaders in adopting digital. Question 3 is why have fintech startups had a hard time competing with the tech giant? The first reason is that a financial and resources issue. Big tech and large financial companies have a much greater resources than startups, so they can spend more not only on marketing, security, and user experience, but they also have financial strength to absorb losses while building user adoption, which is one of the biggest challenges for startups. Moreover, consumer trust and recognition. Consumers are very careful when it comes to money. Tech giants like Apple, Google, and banks all have a solid reputation for security and reliability. Startups must first convince users that their services are safe, legal, and private, which is expensive and time-consuming, especially for older generation who prefer traditional cars. Final is that the ecosystem advance. Tech giants own both the hardware and software ecosystem, which allow them to pre-install their payment apps on device and make them easy to active. Users don't need to search for, download for, or learn to trust a new app. And the final question is what is Chile and why it has grown so quickly in the last few years? Chile is a digital payment service created by a group of major U.S. banks including JP Morgan Chase, Wells Fargo, and Bank of America. It allows users to send money and receive money directly between bank accounts by using just recipient email address or phone number. Transfers are almost instant and free for users. Zelle is built into the mobile banking app of more than 10,000 banks and credit unions. The reason that makes Zelle has grown so quickly, the Zelle is integrated into the banking app that consumer already use, so they don't need to download a separate app. As a result, it immediately reached tens of millions users when it launched. Zelle is not only transfer money within the minute, much faster than traditional bank transfer that can take a day or more, but also supply many banking services like wire transfer, global wire service, and ACH, direct debit and deposit transaction. Payments are free, unlike some apps that charge fees for instant transfer. And one of the most important reasons is customer trust. People already believe the bank, so they feel safer using Zelle compared to dialing a new fintech app. For conclusion, the mobile payment market is not just a competition, but conversion. Fintech brings creativity, bank brings stability, tech chain brings scales, and retailer bring royalty. Although Zelle is more likely to dominate the field with hug advantage thanks to institutional banks, in reality, the consumer are still more comfortable with sweeping credit and debit card for online and in-store purchase. Therefore, the financial technology industry it still has a long way to go and a lot to improve. That's all of my presentation, and here is my information. Goodbye.